In Europe, the banking system is not as robust as it is in some of the Anglo-Saxon economies. It's not just the issues with the German banks. We also have issues with the banks in Italy as well. So there is a concern that European growth may be somewhat constrained by this sort of situation. But at the moment, I don't think people are looking at this as being a systemic shock.
And we heard a little bit last week that, in fact, it wasn't even on the front page of many newspapers over in Europe or even in Germany specifically. What is sort of the on-the-ground sentiment with the Deutsche Bank concerns?
Well, I think in the real economy, this hasn't come through at this stage. I mean, obviously, the mooted fine has only just been raised as an issue. But as I said earlier, bank lending remains relatively positive. So as long as you're able to go along to a bank and get a loan on reasonable terms, you're not necessarily going to notice what seems to be obsessing the financial markets. Ordinary citizens in Europe are not perhaps as obsessed about financial markets as some media outlets might suppose.
Paul, what's your view on the US economy at the moment, particularly with some swing factors like what the Fed does later this year and the election? Can we see a real concerted effort for GDP growth to improve?
Well, I mean, I think the fundamental underpinning of the US economy at the moment remains the labour market. The labour market really is quite strong at this stage. If you look at wage pressures caused by the tightness of the labour market, wages have really started to build up, at least for skilled and semi-skilled labour. The Atlanta Fed's wage tracker, which is one of the best indicators of the tightness of the labour markets, showing wage growth sort of circa 3.5%. That's pretty robust. And alongside this, of course, we've actually started to get really something of an inflation issue in the United States. Most inflation measures in America are running at or above their 20-year average. The headline isn't, of course, but that's just the oil price. Every other price in the United States is rising in line with its long-run average. And I think that's something which the Fed really should get round to addressing.
So a rate hike later this year?
I think absolutely a rate hike later this year. And then I think the question is, as we go into next year, not whether policy tightens, central bank policy will tighten in the States, but how it tightens. Because there are three pillars, of course. There's not just monetary policy, there's the issue of quantitative policy. Does the Fed perhaps accelerate its process of quantitative policy tightening? And then there's the issue of bank regulation, which has come up before Congress, which is something of an issue in the presidential campaign. Tighter bank regulation is another form of tightening of policy.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the eye right here to watch the latest from CNBC. Thanks for watching.